The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 7th Turnaround Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do all that we can do to have a great afternoon, a wonderful evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. We'll go take a look at the circumstances of what the Bulls and the Bears are throwing at you and I as of about 1:07 in the afternoon. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is trading off 65 points. She's trading out at 17,620. S&P is off 5 points at 2,063. NASDAQ Composite off 39 points. The Russell 2000 down 7. The DAX finished off 200 points. It closed out at 10,676. In the FTSE in the UK off 103 points. Gold's off $19. Silver's down 75 cents. Light sweet crude trading down 59 cents as we speak right now. Let's get right into it. Can you say hammer out there? Now, look, here's what you and I are going to do. We're going to go take a look at what the message of the markets is as of about 10 past 1 o'clock in the afternoon. The first thing that we will do, I'll put up on the screen here for you, just to give you an idea of what we've got going on in the markets. Now, this is kind of a plain screen out here. I'm just going to clearly identify for you the different candle formations. Now, this is the Dow Jones Industrials. Yesterday, let me get my cursor out. Yesterday, what it formed was a nice little hammer candle. Now, today, in today's trading, the low of that hammer candle has been tested. I do not know where price is going to close as of 4 p.m. But the hammer candle's been tested out there. That's a key level of support. That's what's going on in it. We'll go through. We'll take a look at some daily charts. We'll eventually get our way down to some intraday charts out here. But it's important to take a look at these hammerish candles out here because they are bottoming formation candles. If we go take a look at the S&P 500 at 109, what do we got out here today? You can see big old hammer candle inside the S&P. If we go take a look at the New York Stock Exchange out here, right, the wider swath, the wider breadth of the market, what do we have out here? Hammer candle. We have hammer candles galore as we speak right now. Now, they're not in every single indice out here, but boy, they are plentiful abound. But that's as of 110. Whole different story when 4 o'clock, perhaps a whole different story when 4 o'clock rolls around. But what you and I want to do is first get a sense as to what's going on. That's the first place where we're going to start. Let's shift over to the ETF structure so that we can see what's going on out here. Let's go shift over and we'll take a look at the QQQ series. This way you can follow along at home on your system out here. And what's transpired inside the QQQ ETF, right now we've got 27 million shares traded. That's in the first, 9:30, 10:30, 11:30, 12:30, the first 3.5 hours of the trading day. Multiply that times 2, say you get up to about 50 million shares. What the Qs are doing is they are testing, that was interesting, what they are doing is they are testing the May 6 swing point low. It's already done that. That low is 106 even Steven. Now, maybe volume just simply shuts off for the rest of the day. And if there's a test on less than 42 million shares, that's the bottom of that swing point. If there's a test on less than 42 million shares, you will have a rejection of that swing point on price and volume. If at the end of the day. It's still rejection on price when you close above 106, but you've done more than 43 million shares. That says price can go back down there and test that. In fact, what it could do is it could go all the way back to test the March 26th high or low. But right now, we'll just focus on the high, which is at 105.70. That's got 47 million shares. So let's set the nut with regard to the Qs as a 47 million share type day. So you've got a test of a swing point. At this stage, a rejection on price. If we go take a look at the IWM, the Russell 2000, what are we going to see out here? Well, its swing point is from the day of May 6th. That swing point high, 121.49. What have we seen thus far? 121.53. So it's missed it by 4 pennies. Wham, wham, wham. Do we really care? Not so much out here. I'm going to go ahead and give it the benefit of the doubt. Volume, 25 million shares. Now, volume inside the IWM, the Russell 2000, has been coming in a bit strong because that swing point has got 34 million shares out there. Nonetheless, at this stage of the game, you got what looks like a hammer candle to me, and a test of a swing point. They're very close to it, and you've got a rejection of price. That's inside the IWM. If we go take a look at the SPY out here, what have the SPYs done? Well, yesterday, they tested the top of the swing point from March 26th. That high was 206.37. That had 153 million shares. You got a rejection of that yesterday with light volume, 117 million shares. But apparently, that was not good enough. So what did it do today? It got down to a price level of 204.11. The swing point low, 204.12. Well, that clearly is a test of the swing point. You're trading above the high out here. You're trading above the March 26th swing point. Volume so far, 98 million shares versus the 153. I do not know how volume is going to come in. We are seeing a rejection of price, though, across the board through the ETF structures out there. That's the SPYs. We looked at the Qs. We looked at the IWM. Let's finish this puppy off and go take a look at the diamonds out here. You got to love turnaround Tuesday, do you not? The S&P just turned positive out here. If we take a look at what the Dow did yesterday, the Dow tested the March 26 swing point low, 175.46. It tested it with volume of what, 3.7 million shares versus 6.6. Today, you're getting another test of that area. You've done 4.3 million shares. Looks like decent volume. The diamonds need to just simply close above 177.30. So we're seeing tests of those swing points out here across the board. I do not know what the volume characteristic is going to look like at the end of the trading day, the 4 o'clock. Again, if it's on light volume, you could not get a clearer message across the board out here that if you can't bust them down, you're going to go ahead and try and bust them up. And what does that mean? That would mean that the summertime low that we are expecting was in probably like around 12:30 or so this afternoon. But we got to take things one step at a time. Now, what else took place in the markets? Now, this is really a trip out here. If we take a look at the 5-hour chart for the NASDAQ out here. So here's a NQ chart, 5-hour chart. And what the NASDAQ did at about 12:30, somewhere right around there, as the markets were pushing lower, just one more punch lower, the NQ actually got underneath the hammer candle of the open. This is a 5-hour chart we're looking at as the open that took place on Sunday night. So here you've got a test of that hammer low. You pushed just slightly lower to get you down inside the NQ to that 7th wave pattern to the downside, that G wave to the downside. What also has occurred here is you made that lower low and you did it with less relative weakness out there. Always a sign of a rubber band that's getting ready to snap and stretch. Now what else has occurred out here is the NQ last night, shortly after the 4 o'clock close, last night, prices moved up, and they moved up in a big way, and price got above the descending price channel. Now, price got above the descending price channel. They got up to a high out here. Now, what it was actually doing this morning at about, was about 4:30 or so, I'll put in the reason why you and I want to respect these 7th wave moves here is if we take a look in all directions, on all time frames, but if we take a look at what was really going on inside of the NQ, out here. Inside of the NQ, what it did when it made its high earlier this morning, it was doing that with a seventh wave pattern to the upside. So we had that. The market obviously pulled back, went ahead and gave you a nice little seventh wave session to the downside inside of the, on that 5-hour chart, inside of the NQ. So if price can travel, price can stay above this 43.92 type area, price will come back. It'll test the descending price channel. Well, this candle session here closes in 45 minutes at the 2 p.m. session. I'm not sure how it's going to close here, but when you get above a area of resistance, you come back and test it and reject it. Just like when you take a look at swing points, that's really all that we're doing. We're taking a look at price and volume out there. You've got another potential rejection. They are worth respecting out here. Price relative strength divergence, seventh wave sessions out here. Now, the interesting thing is the NQ was pushing down and got below the low of Sunday night. But the ES Mini, the S&P futures, did not. That's right, it did not. And what it did not do then is it did not pierce that seventh wave session that it created Sunday evening. So now inside the NQ on a 5-hour chart, that's sponsored by our man Saratoga Bob inside the Tigers Den. He's the one that popularized that 5-hour energy drink chart out there. So all royalties must be sent off to him. But what also happened is that the ES Mini tested and held what's that level out there? 2037.25, I believe that's the number out there. So there are a number of different levels of support that were tested inside of the NQ, inside of the ES Mini, thus far have held. So now you got a seventh wave session inside of those two 5-hour charts. But look, not to be outdone, you can go to the daily chart inside of the ES Mini out here, and what you're going to find is even on the daily chart, you had a seventh inning stretch candle. You had a seventh inning wave candle yesterday as the market was moving lower out there. So that is to be respected out there. If we take a look at what went on inside of the Dow, well, guess what? The NQ pushed lower, but the Dow did not. That means the Dow did not get below Sunday's session out there, Sunday's open. And why is that important? Well, because on Sunday's open, you had a price relative strength divergent pattern out here. You had a seventh inning stretch. And so we've really got synergy across the board. I've got no idea what those folks over in Europe are doing out there. But it seems to me that the message of the markets is that whatever they're doing, they're going to get some kind of act together, because the markets are just simply signaling to you and I that they are done going lower out here. It's kaput. Of course, we'll see, what's really key here. Let's see how the close, and I won't be with you at 4 o'clock, but let's see what happens on the close here. But we've got enough patterns to be paying attention to that have got to say, look, if you're short, just make sure that you've got stops in place. And if you're long, make sure that you've got stops in place, honor them. In both cases, always be willing to come back in if the message of the market suggests that you do that. So that's really all that we need to know. I covered everything I think that you need to know during that first segment out here. So I say we just spin the tunes, huh? Nah, we can't do that because there's plenty of other things that are moving in the market. So I'm sure that you want me to go take a look at Goldilocks and silver, maybe natural gas, maybe Tesla, maybe Chipotle. Of course, it'd be anything that you'd like. Just give me a call at 877-927-6648. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 37, S&P's down 2.5, Composites off 29 points. So question inside of our Tiger's Den out here. Folks, if you haven't had a chance to test drive the Tiger's Den, come on over to the homepage at TFNN.com. You can check that out for the next 30 days. You know, there's nothing like when you're trying to elevate your game, whether you're playing tennis, golf, trading, whatever it is, it's really all about your peer group. So you always want to be able to play with better players out there, learn from folks. So our Tiger's Den is one of those spots. There's a question. Says, Steve, let us take the intermediate term bear scenario. And that low stay mark the end of selling for several days / weeks. Where can the ES mini, the S&P bounce to as I see it? Now, the first element of that question, in essence, as you and I went through the Qs, the IWM, the SPYs, and the diamonds, all testing that March 26 swing point area, if you know the expression, if you can't bust them down, price will try to go ahead and bust them up. So that automatically opens up going back into the highs out there. That could be it could be to make new all-time highs, but it says that if you can't bust them down, price are going to try to go ahead and bust them up. That's element number one that we'll take a look at. Number two, and I don't know, let's say today ends poorly. Someone might think that that would be good for the bears and bad for the bulls. I would hearken to say that's really not the case when you and I take a look at the NASDAQ composite. In fact, if we take a look at the composite, the bottom portion of my screen, in fact, let me do this here. I'm going to go ahead and do a little scrunching, and I can see if I can open it up just a bit here. Pull this up. Can I do that? And I think I got to do, how do I do it? Do I do it like this? Give me a moment here. Just going to try. There we go. Okay, so that's good. So this way, you're paying attention to the top panel and the bottom panel of my screen out here. We're looking at the NASDAQ composite, and what we're looking at is the price oscillator. And that price oscillator is what is allowing us to take a look at a rubber band that is stretching and getting towards an oversold condition out here. Well, we can see that's taken place so far, even though we've had a nice little bounce so far from about 12:30 till about 1 o'clock or so, 1:30. Inside the NASDAQ composite, the price oscillator is still at a lower low out here. And if we take a look at it 2015, you go back actually a year ago, let's go back to July of 2014 out here when the price oscillator has gotten down into these levels. Let's take it back to October 2014 when the price oscillator has gotten back down to these levels and then gotten back above that zero line. We've seen price get all the way back up to the previous highs. If not, go ahead and make new highs out there. That occurred clearly in October. It also occurred, in fact, if we come down just to take a look at the December level, you can see right now the December level looks like a reading of about minus 51.46 or minus 51.40 as we speak right now. We saw a nice retracement into December. Looks like about the same price move as what we've had thus far. Price went where? All the way back to its previous highs out here. So therefore, the same pattern, the same rubber band stretch. Price can get all the way back to its highs out there. Come back, take a look at a low that was put in on that price oscillator, getting down to the real extreme oversold level in that minus 65-ish range out here. You get down to minus 63. This was back in January 2015. Price got all the way back to the top of its highs. In fact, it went ahead and made a new all-time high going back into March 2nd timeframe out here. So with regard to its price oscillator, when we take a look at the NASDAQ composite, which really got stretched earlier in the day out here, a really bad close is actually going to be more bullish than it is bearish when we take a look at that stretched rubber band. Now, that's with regard to the NASDAQ composite. Here's an interesting thing when you take a look at the New York Stock Exchange, right? The wider swath of the market. Now, as we take a look at the candle formation right now, you've got a hammer candle. Now, you've got a hammer candle at the completion of an A to B equals CD down pattern. Your A point out here looks like May 21st. Your B point down here looks like June 9th. Your C point is either June 22nd or 23rd. I'm not going to worry. They're both about the same price level. You can see you've made a 1 to 1.272 A to B equals CD. You've gone ahead and you formed a hammer candle. That's a buy the D point. That's if it is a bullish reversal signal as we come into the close today. So that's one pattern that has completed. Secondarily, we've gone ahead, or not we, but the New York Stock Exchange has gone ahead and it's made lower lows, and it's done it with what? With its price oscillator saying, not so much. So in other words, the underlying instrumentation, the underlying instruments inside the New York Stock Exchange, they're not saying that there's all of this stuff to worry about. That once this whole Greece thing becomes unwound, just as if this is Greece related, it certainly is currency related. You know, if you take a look at what's going on, the headwinds this morning, the headwinds this afternoon, you know, you've got this Euro Japanese yen. It's been down big. You know, the Euro Japanese yen, when it opened up on Sunday evening, last Sunday, you can see that buyers came in and pushed it up. Same thing yesterday. Now, that's not the case as we speak this morning. That's our headwind with regard to price moving lower inside the marketplace. So there's a couple other elements that I'll go ahead and share with you when we get back from this breakout here. But if the market has made a bottom, you're back up to the highs. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. Dow's off about 39 points. Let's finish off the taking a look at the oscillator reading. I do not know how the Dow is going to finish, but the Dow is very close to the price oscillator. That's what you're looking at in the lower right-hand panel of my screen out here. To actually get it above the zero level. So we know we had a hammer candle yesterday. That was also, by the way, inside the Dow. I mean, we took a look at the NQ on a daily basis, the ES on a daily basis. I believe the YM. I think we looked at the Dow futures. Well, inside the Dow Jones itself, it also is in that 7th inning stretch with a hammer candle. It's been tested. We may even, depending on how the Dow closes today, you could get a second hammer in a row out there. Now, what does that just tell us? It just tells us that bulls are truly out there. Someone is out there defending those lows, and that's really all that you need to know. You get that combined with the price oscillator getting above zero, the summation index turning up out there. That sets up a move to the upside out here. Now, with regard to the NQ out here, so we've taken a look at the composite, the Qs out here. I want to show you one other pattern. That's going to be by switching over here. Let's take a look at the daily chart. And when we take a look at the daily, well, no, where was it? Right here. Okay, so we take a look at the NQ. Now, the NQ happens to have a pattern that many people would confuse as a double top or a triple top. In this case here, a triple Lindy, right? A triple top. The first high inside the NQ took place on April 27th. That high out there was 45.41. The next high, nice wide-ranging bar, took place on May 27th as price got up to the 45.44 level. And then in that beautiful Rodney Dangerfield triple Lundy move out there, you had prices move up into the highs back on June 22nd. Nice little key reversal session that took place out here on June 24th, setting up the triple top. Now, here's the deal about a triple top or even a double top. I'll share with you something that you'll be able to put in your quiver and use forever, because this is what people tend to overlook when they take a look at double bottoms or double tops or triple tops out here. And what they forget to look at is they're only focusing on the highs. What they're not really looking at is that in order to confirm a double top, you actually have to be able to take out that first low out here. That says that the low here from May 6th needs to be taken out. It was tested today. It has not been taken out. If, in fact, we don't, and by taken out, I mean it's got to be a close below that level, which is 43.40. So all that it really sets up out here, as we know, as of 1:36 p.m., is that we don't have a triple top. We don't have a double top. We have a consolidation pattern that is in play. And in a consolidation pattern, if you can't bust them down, you will try to go bust them up. You'll try to go back up to the highs out here, 45.42. So to answer that question, when we took a look at what went on inside of the ETF structure for the diamonds, which, by the way, rejected the swing point yesterday on price and volume. The SPYs, which did the same. Now today, you've got the SPYs testing the lows. The IWM, the QQQ, all testing their March 26 swing point. We know they've rejected price. The volume piece of it, I don't know how volume is going to end up, what it's going to look like at the end of the day. But nonetheless, if we do have a rejection of that swing point, if you could not bust them down, I'm not the one who coined this expression. Tom's the one that coined this expression. It's a great one, right? If you can't bust them down, you bust them up. What does that mean? It means you go running for the highs again out there. So to answer that question with regard to if this is a bear market, if this is a intermediate term low out here, where is price going to go? Well, look, the answer, the minimum answer to that question, if we were to take a look at the NQs, you can just simply take a look at retracement levels. But what I would say, the preponderance of evidence is in, as we speak right now at 1:38. Anything can happen in the next minute. Anything could happen in the next few hours. But the preponderance of evidence is in that prices are going to go back up to their highs, and they're going to go beyond their highs. We're going to see new all-time highs out there as we go into this nice summertime rally bottom. All we've got to get out of the way out here is probably this Greece shenanigans. The China thing, I'm not too concerned about. We took a look at that yesterday, and the mere fact is that there is no correlation with regard to what's going on over in the Shanghai than with regard to the U.S. markets, because anyone that's selling you on that is ignoring the mere fact of several years where you had the Shanghai moving lower and our markets moving higher out there. And if so, you can't have one and not have the other out there. Now, if we take a look at places where price can just simply move to, price can just simply move back inside the NQ to 4470.92. That's a 0.618 retracement, and you can say, that Rhodes guy is nothing more than a bunch of hot air. Nice hot air out there, but nothing more than a bunch of hot air. As we know it right now, everything that well, there's one other thing here. I'll go ahead and throw one other thing out into the fire, because I like to do that. I'm not really trying to prove a point. I'm providing you with the information, you with the data. You make your own conclusions out there with regard to, you've been listening in on the shows long enough to know when somebody's trying to sell one agenda versus the other agenda out here. I think you are. I'm just simply, let's take a look at different patterns. Here's a cool pattern that took place several days ago. It was early last week. This is my Marty Zweig thrust indicator. You can't find it on any trading system out there. That means I've been forced to, over the years, when I say over the years, going back into 1990, when was the first time I was able to actually get the data? 1996, when I was able to get all the data on this. And it's a really cool indicator for a couple things. Number one, to identify major bottoms out here. The last major bottom that took place inside this, that was at the October lows. That's why Stevie has said, will continue to say that the October lows, when we take a look at the New York Stock Exchange, they're not going to be touched for any time soon. The market still wants to move higher. And those are major bottoms. We saw a major bottom signal out here as well back in October 2013. There's a couple other ones. Here's what I really want to focus in on. Is inside the New York Stock Exchange, you and I already looked at the divergence with regard to the price oscillator, which has not been able to move to a lower low. But what we have seen is we have seen the price move to a lower low out here. As when I take a look at this indicator, which, by the way, it's not updated as we speak right now today. It's updated through yesterday out here. And the reason why I've been paying attention to it is because I was looking for, are we going to get that next thrust signal? And I don't know that we are. I wasn't really planning that we would. But instead, what I was planning is that when this indicator gets down below the minus 0.382, it's really minus 0.40 out there. Hey, you know what's kind of interesting? Just as a side note here, what was the percentage of votes in Greece to the no level? It was 0.618, I believe. They've rounded it off and said 61%. I bet you if somebody goes and does the math, you'd find that it's 61.8% of the people. Leonardo Fibonacci lives again, even in Greece. Somebody says 61.98. How about that out there? In any event, if we take a look at this indicator, when that thrust signal gets down into that oversold reading, what it has done in the past, even back here in the time frame of December 2014, is that Pythagoras baby, his price was able to make it back its way back up to the highs. It did the same thing back here in August of 2014. The same pattern out here back in October of 2013. The same kind of pattern that took place in August 2013. So the preponderance of evidence, as we take a look at it right now, says that prices are able to get all the way back up to its highs out there. And that is my read at the moment. If the market throws out new information to us, if we see the NASDAQ composite, the NQ, close below that low and we've got a triple top out there, then we'll go ahead and we'll take a look at it. If we see prices close below their March 26 swing points inside of the ETF structures, then we'll go take a look at that. If we go take a look at the VIX index out here, the VIX index, take a look at this. Okay, now what you and I know is one of the best ways that you can use the volatility index is take a look at where it's traveling with regard to its 50-day exponential moving average. Well, if we take a look at it and with regard to candlestick charting, right, the message of the buyers and sellers, the bulls and the bears out there is really one thing. Their one thing is to go ahead and paint signs for us. Those signs that they paint for us are either bullish or bearish reversal signals out there. They are what's providing you and I with the message of the markets. Now, here's the interesting thing. We take a look at the volatility index. Back on the trading day when it made a high, its most recent high at $19.80. That was back on June 30th. It went ahead, just the opposite of that hammer candle that we were taking a look at. It went ahead and made a shooting star. Just like a hammer low can be a significant low out here. And if you're one that believes that, then don't fool yourself, even if you're on the bearish side of the trade out here, to say, I'm going to go ahead and ignore the shooting star. Well, what we've got today is two shooting stars inside of the VIX index. So what this is telling us is the ability for the VIX to get above 1980. Not that it can't, but it's going to take as much energy as it is for the markets to try to push below the Dow's hammer low out there. And we'll see how the rest of the day trades, completes, finishes, and whether or not there are hammer candles inside the market. I won't know till 4 o'clock, nor will you, but certainly you can check back in tomorrow and we'll see what's going on there. So that covers, I hope, the general market, what I believe the message of the markets, what the charts are expressing to both you and I out here. Now, let's go take a look at what else is going on inside the markets. Let's go take a look at Goldilocks. Gold off 20 bucks here this morning, trading out at 11.50 or this afternoon, 11:53.30 as we speak right now. And we take a look at this gold chart here. Gold chart, both priced in euros, which is at the bottom portion of my screen. You've got gold priced in euros at 10.53.10. 10.53.30 is the low, is a consolidation low, is from February 18th. Gold priced in euros has been hanging out right around there. Now, it's really kind of interesting. You would think that with the issues that they've got going on in Greece, with the mere fact that paper currency seems to be being either hoarded or the banks don't have enough. Man, if you were ever expecting 90% silver coins to make its way into the marketplace, or gold coins or silver coins to make it in, it would be now. You would expect that these metals would be jumping off the charts. They have not. Now, the top portion of my screen happens to be the daily contract of gold priced in U.S. dollars. Now, what gold has done here today is gold has come down and it has tested the bottom of that trend line right around the 1153.30 area out there. Will that level hold? It looks to me like it will hold. Where will gold trade to? Where will it bounce to? Hey, look, the last time that gold made it down to that trend line, gold was able to make it all the way back up to its prior swing point, which was March the 2nd. If that's the case here, I would expect that gold will make it all the way back up to its prior swing point from June 18th. Which is right around the 1204 area. So you're looking at about a $50 potential move in gold as long as it can hold this trend line out here. Now, if it can't hold that trend line, what does it mean? It says that gold, who was all the way down to lows from November 2014. Now, and in this case here, the trade in gold, because we had a full moon a couple of days ago. Typically, a full moon is an initiation move. It has not been the last two cycles out here. And it looks like that we're going to get the same kind of feel this cycle as well, because really, gold should have taken off. Yesterday would have been an indication that it should have followed through and taken off to the upside. I don't really care about the U.S. dollar index because that correlation they don't always sleep together out here. And right now, I think they're sleeping in different bedrooms out here. So gold is up against a level of support. If it can hold this area, expect gold to bounce up into about the 1200 area. That's what's going on with it. I have a request to go take a look at silver. So let's go take a look at silver. Then we'll go take a look at some of the mining equities to see what we can find out here. If we take a look at silver, off 77 cents, off hard today. Let's go see what this is trading back into. In fact, we'll go take a look at the GLD as well, just to get a nice volume perspective. Now, this is kind of interesting because silver here had a huge day. You may remember it, that trading day on December the 1st, 2014. Well, silver's now come down. I don't have the volume characteristic on that, so we'll go back and take a look at the SLV just to get that. But right now, what we've seen is a test of that low. In fact, let's not waste any time. Let's go do that right now. The SLV. Let's go see what the ETF structure and what it was doing on December the 1st out here. And it's December the 1st that we want to pay attention to. Then take a look at the volume. I believe we do. Where is it? Where's December the 1st? There's December the 1st. Of course, the swing point is actually all the way back here. It's below that swing point. So maybe now, we take a look at the contract versus the SLV. The underlying instrument, I'm probably not going to get as good of a readout here, but big volume today to the downside. Could this be a washout low inside of silver? And let's take a look at the A to B equals CD down pattern out here. Let's take a look at it, see where that completes. Your A point up here looks like January 22nd, your B point down here on March 11th, and your C point out here on the trading day of May 18th. You've pretty much made it 1-to-1 A to B equals CD. 1390 would have been the exact price. The low out here has been 1403 inside of the SLV. Let's take a look at the GLD. Let's go see what it is doing out here. See if we can get any kind of feel for what the GLD is doing volume-wise, swing point-wise. So inside the GLD now, we're taking a look at the two swing points, really. If we go all the way back into the November 5th, 2014 timeframe, you had volume of 13.5 million shares. Now, the top of that swing is a 110.84, your 110.66. If you can close above, or the GLD can close above 110.84, do it on less than 13.5 million shares, and you're at 7 million shares right now, you'd have a rejection of that November 5th swing point on both price and volume. Now, that's not testing the bottom of that swing. That's testing the top of that swing. The bottom of that is 109.67. The secondary swing out here looks like that swing takes us to March 17th. That high is 111.35. This is Steve Rhodes with none other than TFNN. Dow's off 18, S&P just about flat. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So you got the Dow off 26, S&P down a point, the composite off 27 points right now. The NDX is off now inside the, so you've got hammer candles as we speak right now. I know you've got them inside of the composite, inside of the S&P, inside of the New York Stock Exchange. I don't believe we have, do we have it inside the Russell 2000? Give me a moment here. Take a look at the, yeah, you've got it in the Russell 2000. If you're a bull, you'd like the market to just simply shut down right now. It doesn't matter whether you're bull or bear, but look, here the key is going to be at 4 o'clock. What do these candle configurations look like at the end of patterns that are out here? They're just patterns that are worth respecting. They are absolutely worth respecting out here. So we've taken a look at price and volume analysis on the ETF structures. We've taken a look at the summation index and the price oscillator. We took a look at Marty Zweig's great work that most nobody, how's that for great grammar out there, that very few people take a look at, but really one of the more powerful tools that are out there. We took a look at a triple top. That was the triple Lindy. That is really not a triple top at all. It's just nothing more than it's turned into a consolidation pattern. It had the potential, still has the potential, but you've got to be able to take out that first low. And it's the same thing when you take a look at a double top. And remember, whenever you take these things out, you've got to take a look at where's the next natural area of support. The expression, when you're long, you're wrong if you close below a hammer candle. What I never really did for most of you folks was fill that in. What does that mean? Does that mean that the sky is going to fall? No, it doesn't mean the sky is falling. It means that you're going to move down to your next level of support out here. That's why, look, for this week, it is important with regard to intermediate term trading, what happens inside of the New York Stock Exchange. There's a weekly chart for the NYSE. We've got really two trend lines to be focused in on. That first trend line is the one that we're going to take a look at happened to be one of those Zweig thrust indicator signals that took place back in October of 2011. That, in fact, we should change that trend line color. Let's change that trend line color just so it doesn't confuse everybody on the air. Let's change that from white. Let's change it to yellow, right? The caution sign out there. Okay. And as we take a look at it, you can see that price is trading right on that trend line as we speak right now at 10,751. 10,771 happens to be a horizontal midpoint of a horizontal trading range boundary. As long as the New York Stock Exchange can hold that level this week, you're going to have a test of a level of both horizontal and diagonal support out there. That's powerful. That's powerful enough to say, hey, I'm going to go back up and test those highs. Look, folks, the highs are not that far away from where it is that we're trading right now. And so, therefore, for price to move, we covered this yesterday. So go back, if you'd like, and listen to the archive of yesterday's show. And when we took a look at it, we took a look at the Dow transports, right? The Dow transports, they did have a hammer candle earlier in the day. They do not as we speak right now. But what we took a look at was a divergence because the transports topped out many, many weeks ago, and they've been moving lower and received many charts from folks, many emails from folks making me aware. How can you be bullish when you have that divergence? And in each case, I've tried to send back the same chart that said, well, look at the pattern. And the pattern is this. If you go back and you study it over the course of the last 25, 30 years out there, what you're going to find is that when the transports top, and there is a significant top in the marketplace, the Dow doesn't top for some 40 weeks or 43 weeks or 47 weeks. I think the earliest was like about 35 weeks or so. You got time. You got till the end of July before that time frame even comes to being. So, folks, stay tuned. Our man David White is going to be up next. He'll hit you up with his ideas. That squeezably soft, Charmin-oriented gentleman out there, because it is Tuesday. That means we got the Tom O'Brien Show and Andy Heck to take it on home. So have a great Tuesday, folks, and I'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.